In this video, you'll understand how to become an actual profitable trader and run trading like a business. If you don't already know about us at AlgoBars, my name's Alman Chima. I've been trading for more than 20 years now, so this video should compact over 20 years of knowledge into one video for you, so that way you can do it right the first time. Or right at this point in your life where you may have been failing at trading and you almost have an edge, but you're not quite there yet and you can't understand why because you feel like you've tried everything. Or if you're completely brand new, even better, this will save you a lifetime of headache and losing tons of money. In this video, we'll cover risk management, exactly how to scale in trades, the platform we use and why, as well as putting into perspective how you can actually grow your capital. Whether you have $1,000, $10,000, $100,000, $1 million, or whatever. 100 points profit is always 100 points profit. Doesn't matter if it's $1 or $1 million. The market will always move multiplied by the number of lots that you entered. So let's start with account sizing. People love to ask, how much should I start with? You need to understand that whether you start with $1,000, $10,000, or $100,000, the market moves in percentages, meaning that the same 100-point move is 100 points no matter if you have $1,000, $10,000, or $100,000. Let's say there's John with 1,000, there's Steve with 10,000, and there's Mo with 100,000. All three of these guys enter the same trade at the same time right here at the close of this candle. As you may have already learned in other videos or from watching our lives, this is where we enter the trade. There you go. So right there, whereas John entered with 1,000, he entered with 10,000, he entered with 100,000. All that happened is that they all made the exact same trade and got the exact same result, but his totaled $1, his totaled $10, and his totaled $100. And multiply that over time, they're all up 50% in their account, for example, in 6 months. But dollar-wise, his 50% was $500. On 10,000, it was 5,000. And on 100,000, he did even less risk because he doesn't need to risk that much. And he only did 30%. He made 30,000. He outpaced both of them because of his balance. So if you're close to zero like this, you're asking for trouble. Not only that, but you can only trade one market. It's kind of like you're crippling yourself inside of the ocean. And then on 10K, you can barely trade. You're not even at day trade margins yet, which are 25K, and you're trading two markets. And then at 100K, you can fully take advantage of every market type by diversifying the range bars on several charts: gold, oil, stocks. Look at this huge sell trade that just happened on gold, Ethereum, crypto. As you may already know by following our systems, all markets are exactly the same. Once you remove the name, using the range bars, all markets are exactly the same. So what you want is speed, volatility, and consistency across markets because the trend will reveal itself no matter what. So by having a large enough balance, you can sustain that. Part 2. We've developed this strategy by testing all of the data for the past 50 years. We manually purchased all of the market data, which cost hundreds of thousands of dollars way back in 2007, and we tested it forward one by one, candle by candle, like this, going one by one, writing it down, -100, -100, +100, -100, and like that. We tested that across different market types, sizes, candlestick patterns, different charts, everything that you can possibly imagine we tested, and we automated that into the AlgoBars platform for you to do as well if you want, or you can follow the already working system that we use every day and fast track your trading. And by doing that, we discovered exact parameters that work the most, which is 100 points on both sides. Because we know that the market will move at least 100 points several times an hour, and we can capture that with the range bars by setting the range bars to exactly 100 points. So on USDJPY, 100 points is written as 0.01, but it's super easy to follow across every market that they will all move 100 points. On BTC USD, 100 points is 100 points. You can see here on BTC USD, 100 points is 100. You can see right there. So you can see right there the high and the low. Let's change BTC range to 50, which means that each brick will be 50 points plus the wick. That makes it 100. So you can see right there the high and the low right there. So the high is 967 and the low is 875. That's 100 points both ways, minus the spread. That's why it's slightly off by a few points, because naturally it's just a few points off because of the spread. And there you go, 100 points. And then on USDJPY, for example, as we were just on, 100 points is from, remember we're looking at the high and low right there, high and low. The high is 157.58, the low is 157.48, so 0.1. So it's the same 100 points, it's just written in different digits depending on the price. Because 100 points on USDJPY cannot literally be 100 points. It can't go from $157 down to $57. It's written in decimals. So in that way, all markets are exactly the same. We measured that across every market, and we determined that 100 points can safely move every hour. What does that do? For $1,000, we're risking 0.01. For $10,000, we're risking 0.1. 100,000, we're risking 1.0. The margin being used is $5 on 1,000. On 10,000, it's 50. On 100,000, it's 500. Margin is the capital being held on the open trade. So let's say that I open this trade right here. Buy. There you go. The margin required was $5 approximately. That's the amount that's being held in my account to activate that trade. So for a $5 risk on $1,000, which is 0.5%, that's how we're running our strategy. And we tested that across all different sizes, 200 points, 400 points, 800 points. They all work. That's just the frequency of trading. And we want profit consistently every few hours to run a high frequency trading system. And this is the way to do it. So that's how we measure sizing. Hopefully that makes sense. Simply, it's the number of points of the bar multiplied by your lots equals the risk that you're doing per trade. Very simple. Once you start doing it, it's super straightforward. You just have to open trade, measure your profit loss, and see, look, buy on Bitcoin, look right there. 0.01 was my entry, currently negative 15 cents. That means from the current price and the open price of 863, it's at 848. That's approximately 15, 16 cents. And there you go, 15, 16 points on 0.01 lot. Very simple. If I did 1.0, see, it multiplied by 10. And if I did 0.1 divided by 10, there you go. So 0.01, 16 cents, 0.1, $1.16, 1.0, $15. Just multiples of 10. Very simple. So it's your entry price and your lot size equals your P&L, and then you just multiply that. Very simple math. And once you start doing this, you'll figure it out very quickly. Next, this is why we use TradeXN with AlgoBars. If you use any other platform other than the one that we're using here, you will guaranteed lose. This is why we say that you will guaranteed lose your money. Because first of all, the strategy has a 60% edge because the markets are trending 60% of the time. Very simple. What you see is what you get. What you put in is what you get out. Input versus output. Your eyes are inputting information, you're outputting your ideas, and then it's outputting the results in the form of your equity curve. Very simple once you break it down logically of what's happening. Therefore, our edge is 60%. That means out of 20 trades, we'll have 12 of them correct. Here's a simple example. We did 4 trades in a row, plus 100, plus 100, plus 100, then negative 100, plus and so on. After 20 trades, we end up with $400 plus. If you're using any other platform, and we've tested them all, we opened up accounts over many years, every year, all the time, opened up hundreds of broker accounts and tested them all real time to see the actual fees. And on average, you're losing 30% extra. So therefore, when we make $100 on our trade and you enter the exact same trade, you're making 70. Then when we hit negative 100 on our trade, you're losing 130. So you're losing 30% more on your profits and you're losing 30% more on your losses. And trading is a zero-sum game. Like if we're up $100 and then you lose 100, you need to make 200 back to even recover and be back to where we were before we were already up. Meaning we made 300 and you made this much, but then you lost this much and you're down. So if I made $300 on 3 trades and then you lost 300 on those 3 trades, and on the next trade I lose 100, I'm at $200 profit, you're at negative $100. And look, it just adds up. There you go. You're net down 200. So you're paying more and losing guaranteed. This is why it's a guarantee that you will lose unless you're using the exact account type that we're saying, which is the one on TradeXN AlgoBars right here. You can register on our site. You can register from this video. You can register anywhere that we're telling you to. You can register from the link on this page. You can register from our site or go to tradexn.com and use AlgoBars. Very simple. And you will get the exact same spread that we have and no fees, no swaps, no overnight holding charges, no interest. All accounts are Islamic accounts. That way you can actually run your trading profitably potentially instead of guaranteed losing. This is why you always hear us say that you will guaranteed lose. This right here. Because it's not your choice. It doesn't matter how good you think you are. And you cannot get an edge higher than 60%. 60% is insane. Profitable billion-dollar companies ran on like 45% profitability, and then they would just scale up their risk management, as I'll show you in a second. The number of trades is still 45% accurate, and that's it. Let's do simple math on a calculator, actually, just so you see this. I did this in another video. If you're getting 70 or 80% accuracy on your trades, that means that at the end of the month, out of 100 trades, you're doing, say, $800. And if you're guaranteed doing this every month, you're scaling this up so much so that after a year and a half, we did the math. After a year and a half, you're at approximately $500 million if you have that edge, which doesn't make sense because why are you selling us a $200 VIP course discount offer, your Telegram group course $500 one-time fee, 30% off the 7-day trial? It doesn't make sense. So you need to understand that these are the numbers and these are not your choice. This is math. This is statistics. There's many high frequency trading books of quantitative finance that we read. There's many things that we were involved with in terms of HSP platforms at banks to know these numbers. And anyone who's educated and actually understands the markets and not your friend and this massive cesspool of nonsense people on the internet that tell you they have high edges will tell you that that's physically impossible. Anyone who's intelligent will tell you that's impossible. Once you understand that you're guaranteed going to lose, you'll realize the only way is set up on AlgoBars TradeXN and get the exact same result movements that we do. Okay? Next, scaling in trades. This is how we get a 2-to-1 ratio. Look at this example. Imagine the market's moving. It's moving, it's moving. Right there, we enter our buy. It pulled back. We entered a second buy. There we go. On that retracement, we got that extra 2x return on that trade. Our risk was still 100 points. But we got an extra bonus of this 50 points, ended up getting $250 instead of getting $100, and our risk was still $100. So $100 risk or $150 risk, $250 gain, approximately 1.5 to 2-to-1 ratio return. And that's how we scale up in our trades. And that's how we end up doing larger amounts monthly than normal. Instead of doing the 400 we would have got for the 1-to-1, imagine just 30% of our trades are scaling up on that pullback and we're getting that extra 2-to-1 ratio for a huge added bonus. And if you're using any other platform, you'll guaranteed fail because you won't even be getting this in the first place. You're actually just adding to your losses unless you're using TradeXN AlgoBars. This was a perfect example right here earlier. We would have entered the sell right here. There's our sell. Here's the pullback. We would have got this pullback. Done, $250, 250 points done. That could have been $250. It could have been $25. It could have been $2,500. It could have been $25,000. It could have been $2.5 million if we had $1 billion balance. And that's it. That's all we do. And we do this every single day in front of your eyes live. So hopefully this makes sense to you. Get started right away on TradeXN AlgoBars. Here's the link in bio, link in this video, link on our site. Go to tradexn.com. Get set up right away. Watch all of our training videos so that way you understand how to do it right the first time and stop hallucinating. Have a great day. And remember I told you that everyone you know is guaranteed losing and we're the only ones that can show you live every day. Have fun. Get started right away and we'll see you soon.